The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And voila, all markets are happy. She has spoken. And let's just get right into it with these S&Ps. I know you guys know what's going on here. Took out the word patience. Said a couple other things. We knew there was going to not be any damaging verbal statements from this woman. So let's look at the 10-year. All right. So we talked about getting back above 121.02 or 128.02 on the 10-year, just to kind of do a clean and clear of that 127.11. 128.02 DMZ that we were looking at. Now the bonds and the notes are, the technical damage seemingly is over and on the downside. And now we're looking at a possible retest of that DMZ for, maybe a buy point here. And when I say that, we're going to have to see how this thing acts down here and just pay attention to stops. And it could be rattling around here for a while. If they're sitting on the launching pad to, not do forecasting. Let's see. Are we still on here? I'm getting a reconnect. Let's see here. All right, let me sit tight, guys. Let me see what's going on here with my charts. All right, we're back. So we're gonna have to wait and see how we act down here back in the DMZ for the long term. And when we get back into that area, hopefully that'll provide some trading opportunities. But I don't think, in my mind, I think the probabilities of just buying the breakout right now without the retest are probably not in order on the treasuries. And we're gonna just take a look at the 30-year in the same light. 163.19. Quite amazing. And this kind of showed its hand a little bit early here, but this is all we have to look at on the June contract. So we're going to wait more than likely for a new profile to appear on the 30-year. So we're just kind of a wait and see attitude on that one. Now let's take a look at the Bund here. German Bund. This is kind of a cool, pretty picture here, and this has just been the case with this thing. If you guys have ever traded the Euro Bund, keep calling it the German Bund, it really paints the profiles very well. And you saw that retest recently. We're sitting right there on the launching pad, and that's just the way the Treasury outlook is right now. Changed its tone relative to what she said. We got to take that for what it's worth, not overthink things. Hope you guys are filling out your brackets before 12 o'clock. That's the closing date, closing time today for talking prices. Closing time today for getting in your brackets into whatever pool you're in or betting scheme, if you will. Let's move right into the Euro really quick. I'd love to know what you're choosing too, by the way, if you want to email me your bracket, if you're really into this like I am. I want to see how wrong I am relative to other folks. Let's take a look at the Euro. Here's, we're going to kind of go over this a little bit. This is the weekly view. And now you've had those comments which are going to affect the dollar. Obviously, we had a pretty big move in the dollar, but we had the biggest move in the euro since the year 2000 yesterday on the upside. Now, to give you an idea, we talked about some inflection points to pay attention to, namely 107.45.46 to possibly sell off of. Trying to sell resistance. Again, this is what stops are for if you're intraday playing this game. And now we've gone back and reversed below that. We're back within the fair auction. So to me now at this stage, this still means that 107.46 is going to be the selling area for this particular product. This was all noise up here. And again, if you played this yesterday, which I was looking at this, I actually didn't get my toe in the water on this one because it was just, I usually am just all in on shorting the euro, but there was so much covering here. You could kind of see it when it was just in a big momentum swing up. It was almost time just to sit tight with this. This kind of proves the concept that this particular currency relative to everything else, it was, short squeeze, whatever, looking back on it, but it's really proven itself. This kind of reversal, when you're talking a high print of 110.40, reverse close pretty lower, and then we're back down at 106. I mean, this is pretty damning news for the euro in general. So we got to take a look at the dollar right after that. So what do you do with the euro? I think you're still selling that 107. Let me just pull that up. I think you're still selling retracements back up into 107.46, but let's just kind of see how the short-term action here has happened. Had a high print this morning after the retrace into 107.37, so we didn't quite get there the last hour on the retest of the inflection points up top. But if you can see, we had some shorter term levels here, but that stronger level hasn't been hit yet. We've gotten very, very close to it, so you still might have a trading opportunity from the short side. I hear you, Fletch. This is, yeah, it's just sick. It's amazing. Again, we've talked about the administration having her family in the closet somewhere feeding them through a hole, but it's pretty sick. Let's take a look at the dollar. We got to take a look at the dollar now. All right, so that cannot be real. Hold on. Is that real print? I don't know if those are all real prints down there. Let me see. Let's go into a 5-minute here. No. Well, I don't know if those were real. Yeah. Those were real prints. I don't know if those were real prints down there. Maybe somebody can alert me of that. Okay, so here's our 60-minute. And what do you do now? So the major inflection points that we've been talking about were the previous to yesterday, before we had a new profile lock in what we're gonna have to wait till my screen refreshes here. Sit tight, guys. We get our chart back up. Come on. Here we go. Current profile 99.23. Previous profile was 95.52 that we were keying off of the launch a long time ago. So what do you do now? We obviously crossed the borders. We're coming back into retesting. We pull up the weekly. Here we go. We're still, bless it. We're going to check into our connection here. Is Hermes or something? Yeah, you're going to, okay. All right. We're going to try to take care of this at break. Al, can we go to break a little bit early? We're going to try to sort through the, well, I think we're having problems on the Amazon servers here. Al, is there any way to go to break a little bit early? We can start looking into this. Guys, I apologize. Al, yes or no? Yeah, can we go to break a little early here so I can try to look into this so we can have some charts? Yes, no. Okay, all right, we're gonna stay on. Al's telling me we're automatically in here. He's going to try to override it. Let's take a look at a couple other things that I wanted to take a look at. Then I thought that was a quick fix. It's not. This is the Shanghai. We're just going to look across the board at some breadth here because I wanted to show you how astonishing. And here's the S&Ps. Here's the breadth on the S&Ps. That was the Shanghai. This is the NASDAQ. As we look across the board, it's amazing what one woman. Here's the Eurostoxx 50. The Bovespa is just suffering because of that Petrobras thing. Oh, God. Here's the Thai. Looking a little negative. Let's take a look at the Nikkei. A lot of markets obviously loved what she was 1 minute to break. Okay, she said yesterday, but let's take a look at the Shanghai again. This thing has. I'll try to go back into my charts here to see if we're back up. I wanted to pull up the Shanghai in particular before we got deep into the S&Ps. Gracious, apologize for this. Here we go. Let's look at what happened with the Shanghai this week alone. So 3406.79, we talked about this level up here and crowding into it. I get a lot of questions from over here about this, but let's take a look at what's happened here. They were asking, is it, when we started talking about the breakouts and the retests in the 32.29, then we had that confirmation on the weekly. The question is really, is this thing too high and is it time to start looking at it from the short side? The answer literally is no. And why is that the case? That's because you don't have anything to hang on to over here. You've also got some fundamental news, some overhanging fundamental news that with the Chinese stocks that, this is something that you don't want to stand in the way of this. And as you've seen the Shanghai move before, this thing can move up another 1,000 points in a blip. So as we're looking at this, the short answer to a couple of the emails that I was receiving from the Asian customers is there's no way. I think this is still a pile into the long trade for the Shanghai. Let's get right into the S&Ps. We got about 10 seconds before break here. What we want to do, we talked about this 2069, 2068 through 2070 area and trying to wait for the announcement to come out before we started taking a look at this. And obviously we had a reaction up north that now we're going to have to take a look at how we're going to deal with some of the inflection points up top. We'll be right back, folks.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And again, apologize for the technical difficulties this morning. It's not TFNN, it's on my side. It's the Amazon servers that I've got this little mousetrap on you're looking at here. So around that 2068, 69, 70 area on the S&Ps, you know, we had that move up. We talked about waiting until the dust settled and the trading the reaction, and now what do? We're trading way up here in the stratosphere. We've hit that 2100, which was the, you know, the sell-off point when we started seeing breadth changes on the south side, and we started seeing that 2100 as a leverage point before. That's when we started getting in short mode to trade this down, and now we're back right up into the same area that we sold off from, and we're, you know, coming off that a little bit here. But what do? I think, you know, right now you don't have a ton of leverage here. Here's the 240s. I'm going to pull this back up. You don't have any new profiles. You'd want to wait until you see something new. That's going to be delivered to you in the scanner. But on the long-term basis, you know, it would be really super cool to see this thing come back about another 15 or so points into a major profile that's sitting here for a retest after that breakout. Now, that's a pretty serious pullback in a retest. You may not have that opportunity, actually, so you're going to have to pay attention to these 240s. All right, I think you're going to be provided another profile with some more support, but I think you're in no man's land up here right now, and there's not a lot to pay attention to. The ultra short term, which is also delivered on the scanner, this is kind of the landscape for that. You can see some of the profiles related to that. I'm going to go back into the bonds and notes really quick again. You know, we talked about the technical damage that started to happen on the downside. Now we've kind of reversed here. I'm actually not so sure that we're going to continue to have, you know, we've talked about this a little bit. I mean, the worms, in my opinion, had turned, and some of the things Tom and I were talking about I think are going to hold true. I don't know if you're going to continue to see notes and bonds rally. I mean, we've got a lot of factors going on that regardless of what Yellen wants to do to appease every single person in the investment community, ultimately she's going to have to look at the broader picture. And I just think at some point, I think we're already in that phase right now. So somebody was asking my general thoughts on where these things were headed long term. I actually think we're more than likely going to possibly have some more downward movement in these bonds and notes, and this may be just possibly a blip on the screen. That's my personal view on it for the long term. But the technical side, this is kind of what we talk about every day, is right now, you've got some trading opportunities, retests into that DMC. You've got to kind of take those for what it's worth because you're in the fair auction on the weekly and the daily right now. But my ultra long-term view, again, is not really for these things to keep skying. Let's take a look at gold. This thing, obviously, with the markets moving like they were, we reached some targets up top that we were talking about the other day. 1175, overshot that a little bit. Now we're back in. I don't know if this is the flavor of the month to pay attention to, as far as we haven't seen this really show any technical damage. No closes above profiles here. The weeklies are still bearish on this contract. Just not a high probability setup, in my opinion, on gold. I think you could just kind of sit tight with this still. We've been talking about that. There have been some short-term trading opportunities, but they're not really, borne themselves out as far as a long-term trade here to kind of run some of the shorts out of this market. I see we're having a connection to AWS again here, problem. So we're going to pull up our scanner again. And what I did at the break is I pulled up the S&P 500. I just wanted to see, I'm going to take off any sorts that we have. As you can see now, there's not a sea of red, there's a sea of green on all time frames. So we're going to do a little bit of a filter here in a second. And we're just going to see what's not cooperating here as far as stocks that didn't cut the mustard on this rally yesterday. And as we look into this, we're going to pull in some numbers, and we're just going to validate now that you got some. Let's see, that was Shanghai. I was getting ready to freak out there. Our product wasn't right here. So now you've got only 67 stocks trading below profiles. You got the breadth numbers changed. So let's take a look at some of those stocks here that are not cooperating relative to profiles. And let's look through this and try to figure out a couple of things when we come back from break to possibly take advantage of on the relative strength trading side.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
guys. Thanks for bearing with us here. Got a couple of things sorted out with AWS, I'm hoping. We talked about looking at some stocks that weren't exactly cooperating here, and I'm going to pull those up. We're just going to do a daily sort of what's actually not cooperating relative to profiles. I'm going to bring that in really quick. And there's some usual suspects here. There's some pretty serious names: Alcoa, PepsiCo, Bank of America. And we're going to take a look at that XLF in a second. You've also got, Walmart was on here a while ago. I think where was that? Well, we're going to take a look at that too. Big Mo. So let's just get right into it. Let's take a look at one in particular, Alcoa. Let's take a look at that. There we go. And here we are. So stock's obviously been in a huge downtrend, some of it dollar related. And here we go back into 1354 unfair highs. And what we want to do here is, I'm going to get rid of something that just popped up. What we want to do here is take a look at this as if this stock is still showing relative strength, and you've got a $13 stock that may head lower, proving itself to have still weakness here in a market that seemingly has kind of popped its head up again. So 1354 reached a high yesterday of 1343. So what is that? 11 cents off of where the inflection point was. But the good news is now you kind of provided a little bit of a landscape here. This stock has still showed its hand, and you can orient stops above there. And some of you may be saying, God, this is not making me happy when I see that pop up again. Some of you may be saying, what's the upside of shorting a $13, $14 stock? It's put the stops in, turn the wrench the same way, and let's let things do what they're going to do. But the good news is putting stops in on situations like that are always in order. And when you're doing the relative strength trading game, you just can't ignore opportunities like that, because things on their lows go lower, folks. Let's take a look at Big Mo. That was another stock that obviously has some global dollar-related issues going on here. Here's the long term on Big Mo. Had the breakdown last week, obviously, and we've gone back, and let's just see how close we've gotten to the retest this week. So 52.52, and we've reached a high of 50. And I apologize for this. We're going to move right into the scanner. Let me make sure. Okay. This really screws. Here we go. So let's take a look. We're gonna, in a second, when we get back up, we're going to take a look at also Netflix. That's on the list. Occidental Petroleum, PepsiCo. Let's see if we're back up. We're back up. Here we go. This is our weekly. This is our daily. So we had weekly and daily profiles pretty much coincidental. 51, 58, 52, 50 up there. We've gone back and retested. Philip Morris, Altria Group is still trading below profiles even after the rally. So again, this is an opportunity, a little bit of a shorting opportunity, very similar to Alcoa on the radar screen there. Let's take a look at Netflix, NFLX. I don't know why this is happening. Here we go. Here's the daily situation, still 438.41, stops oriented above that particular area. We've come down and reached the bottom of our profile here and bounced 418.64. Attention to obviously 418.64 and I'm going to try to get these cleared up by tomorrow, folks. I apologize for this. Let me pull up our scanner again here. Get our sort back up. Okay, so our 418.64 bottom of the box on our weekly and bottom of the box on our daily 438.41. So on the intermediate, still looking relatively weak, but we found an inflection point to trade off of in the long term. Remember, weekly takes precedence over daily, over 240 down the line. So we could be in a range here, a trading range between 418.64 and that 438.41. So 418.64 is stops oriented down below there on the buy side for a little bit of a pop, maybe back into some inflection points up top on the intermediate at namely 438.41. Go in here and do a resort here. Okay, we're going to take a look at Mattel, MAT. No. We were on Amazon early. We're going to have to call them again, I guess. A couple other stocks. Well, this is just to be on the radar screen. DuPont, and I want to talk about DuPont when we get back. Let's see here. DD, and we're going to take a look at, let's see if we're back up. Yep. All right. While we're up, we're going to take a look at Mattel. Gee. This is frustrating. Okay. Let's take a look at a couple other stocks while the charts are still having problems on Amazon. Avon Products, that seems to be the eternal stock on some short lists here. McDonald's, we're going to take a look at that. That didn't exactly cooperate yesterday. Amazon, Colgate, CL, General Electric. So let's just see if we're back up here. And as soon as I type in Mattel again, maybe. All right. Mattel tricks out the Amazon server. That's what we're finding out right now. Okay. Here we go. Let's type in Mattel one more time. And yeah, the reason we have this on the Amazons, so we're always up, so for the show, so that's proving itself to be not the case this morning. Let's get this back up here. I'm going to pull up the NCAA tournament brackets in a second. I think we can rely on those. All right, so a couple other things. Wynn Resorts, WYNN. These are stocks to put on your radar screen for short opportunities. State Street, STT. Michael Kors, man, that whole, I don't know if you guys read about that or experience Michael Kors. Let's see if we can reboot this, get it back up. All right, here's Mattel. Had some daily and weekly inflection points line up, 24.84. Didn't really react that well yesterday. That's your Maginot line with stops above on Mattel. So we're going to take a look at Michael Kors, KORS. Okay, this is kind of nice here. It's come up into an inflection point, 66.68, and it's down move here. Gotcha. Now, and it's down move here. We've had a nice rally back. Information off of here and possibly lay some more shorts into this 66.68 with stops above that area. That's the situation you're going to have to pay attention to on Michael Kors. We're also going to take a look at Johnson & Johnson. If our charts snap back here. Here we go. J&J. Okay. as you've seen here, we obviously had a little bounce off that 99.02 area, but what do you do now after a rally like that? You still got some supply up here. So 102.12, I still like this from the short side on Johnson & Johnson with stops above that 102.12 area. Gonna take a look at Amazon really quick. Frustrating day. Sorry about this, guys. And then when we come back from break, we're also going to look at McDonald's, MCD from the short side. And again, AVP and Electronic Arts, EA. And let's look at Amazon here. Let's type that in again. Come on, guys. Here we go. Long term on Amazon, we're right in the middle of a fair auction on the weekly. And when we move into the daily, you can see we've been kind of rattling around down here below profiles up top here on Amazon. So again, I think short opportunities on this stock are still very possible. 379.55 is going to be where I'm looking for this stock to retrace up into and hopefully put some more shorts on with stops above on Amazon. Let's take a look at MCD. And here we go. Here we go, McDonald's. So long-term view on McDonald's, here we go. Not the worst looking thing in the world. And it's obviously had some rallies lately, but here's the situation we're really paying attention to. I like this stock staying below profiles on the daily with stops above 97.39 on McDonald's on the short side. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. As this one-of-a-kind winter comes to a close and spring approaches, it only seems fitting that now is the perfect time for a spring Tiger Dollar sale. For this week only, we're doubling the bonus that we give when you purchase any amount of Tiger Dollars. Normally, we offer a 10, 15, or 20% bonus when you purchase Tiger Dollars, but for this week only, we're doubling our special offers, and you can now get up to a 20, 30, or even up to a 40% bonus on your Tiger Dollar purchase. This is one of our best Tiger Dollar sales of the year and won't be around for long. Tiger Dollars can be used for any TFNN product or service and provide a great way to lock in added value on your subscriptions. Tiger Dollars never expire, so whether you're a current subscriber or plan on subscribing at one point in the future, take advantage of this spring Tiger Dollar sale this week only and get up to a 40% bonus on your Tiger Dollar purchase. This sale ends Sunday night, so don't miss out. All the details are on the front page of TFNN.com. Get your Tiger Dollars today and lock in your bonus before this sale passes you by.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
All right, didn't know it was on. Okay, guys, let's try to get started again in here. Here's McDonald's. We talked about that inflection point, 97.39. And we're going to go back into a couple other stocks right before we go to finish the show here. We're going to take a look at Bank of America, which was also on this list. And, we are, Jesus Christ. Okay, all right. I tell you what, guys, we're gonna close the show a little early today. I'm just continuing to have network problems here today for some reason, and we'll be on with Amazon. We'll try to get this cleared up as soon as possible. And I really appreciate you guys attending today. Steve Rhodes is next, or Tom O'Brien is actually filling in for Steve Rhodes next on the Trader's Edge. And we'll pick it back up again tomorrow, and we'll try to have all this cleared up. Thanks, guys.
Since '94, Basil Chapman has sing the Chapman. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his Opening Call newsletter. Right now, you can get a 2-week free trial to the Opening Call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.